now we have a player called Nvidia. If you do not own Nvidia stock, highly encourage you to invest in the company, invest in the future of technology, and invest in the future of the artificial intelligence space and possibly the quantum computing space. All right, so we're going to take a look at the before earnings report from the experts on Wall Street as they analyze what Nvidia had to report in their earnings, and then we're going to get into the actual earnings report. Let's take a look at it.
Hi, Joe Terranova. Shares are up 40% in 3 months, up 5 straight months, more than $1 trillion in market cap added since the tariffs took hold. The options market's pricing a 6.2% swing higher or lower following that print. What say you?
And what other company in the world is going to give you $46 billion in quarterly revenue, 50% earnings and revenue growth, and talk about the potential for the return of sales in China? Now, I will absolutely acknowledge that the bar is high, that clearly the appreciation of the last several months, the significant positioning, remember 8% weighting in the S&P, that really means they have to blow out the quarter. But I think a lot of people are extrapolating from that. If they don't blow out the quarter and Nvidia rolls over, that in fact the market will roll over with it. I completely disagree.
It's 8% of the S&P.
I think all that will happen is that the rotation that we're seeing in the last several weeks will intensify away from the Mag 7 and the technology names. You'll be talking about equal weight strategies working. But I think everything goes back tonight to what is going to be the guidance for China revenue. There's been a lot of volatility, a lot of fits and starts in that. We know about the 2022 restrictions. Then President Trump in April bans the sales, and here we go. This month we return them, but we're going to cut 15% back to the U.S. So let's hear from Jensen Huang tonight about what the future is looking like with China sales. To me, that's incredibly important.
Is this bar too high to meet Farouk, given the move in the stock 40% or so? There it is. There's year to date, but in the last 3 months, that's the whole show.
Yeah, I do think right here, right now, the bar might be a little high. And now we own it. It is our top position. But we are underweight at 6.5%. It's funny thinking back to 2021 when I started these models, we didn't want to own anything more than 4% or so. And I mean, you have to own some of these names larger than that. It's also what else you own around that, to Joe's point. You could see Nvidia come down and some of the other tech names that hyperscalers kind of sit pretty well. But I think for Nvidia, assuming they beat, assuming the guidance is beat as well, I think it's really more about positioning. And past performance is not indicative of future results, but if you look back, the May report, we were coming out of that tariff rally. I think that we finished up 7% that day. Is a little different. But the prior 3 reports, going back to February and then 2 into 2024, that's more similar to where we are now from a positioning standpoint. The expectations are mounted. We know what the hyperscalers did. Their CapEx increased. Not only that, we're seeing the outside of the Mag 7, their CapEx trajectory is higher too. So I think it's really going to be about positioning, and then things like margins, and then how the narrative of and trajectory of innovations are going to come out. We'll hear more from Jensen today.
Well, we have our expert here, Christina Partsinevelos, covers the company, is as looking forward to this report as anybody else. You've heard part of the conversation here. I mean, if there's something that I said, what's the most important thing that we need to hear tonight? How do you answer that?
China. Joe touched upon it, but he's highlighting a disconnect that we will see right when 4:20 p.m. Eastern hits. Why is that? Earnings will come out. You have sell side that has a certain number, $52 to $53 billion for their revenue guide. But buy side, that number is higher at $54 to $55 billion, assuming China is included. If that number isn't hit, you might see a sell-off immediately. And that's the point. Jensen Huang would come on the call and speak to the growth, speak to possibly China re-entering the market, licenses, et cetera. You have to keep in mind, AMD didn't include China in their guide. NVIDIA doesn't break out China in their guide. They'll speak to it, but they won't say specifically China contributed X or China licenses will contribute Y.
So the conversation right now, just to explain it from layman's terms, right, is the stock of Nvidia has gone up over 70 to 80% since April lows this year, right? So if you invested in Nvidia back in April when it was priced out around $90 a share, you would have made 80 to 90% of your money on top, right, of your investment. which is a great investment. But from a stock perspective, going into an earnings report, it's difficult for a stock to rally farther up when the stock has already rallied really high, right? Usually an earnings report can be volatile either up or down depending on the stock and depending on the situation. In this situation, Nvidia's stock has already ran up to 180 at this point, $182.09 as of yesterday afternoon, right? So they're discussing, is it possible for the stock to continue to rise, and what is the possible headwinds meaning friction when it comes to the stock going higher when it comes to their earnings report. So she is basically spotlighting China. And if you've been paying attention to Donald Trump, president of the United States, he has initially put on tariffs on China. Then he tried to restrict the type of technology chips, including Nvidia's chips, that would then be given to China for their technology, right? And then he took off the restrictions and said that Nvidia would have to pay 15% of their revenue, percentage to the United States government to do business with China, right? So right now, Nvidia, along with another company like AMD, is in a tough situation trying to figure out if they can trade with China, how much the United States government is going to charge them to do business with China, and if there are going to be any restrictions, right? And as we get farther into the report, you will see that there will be a missing number within their earnings report due to this issue when it comes to the China revenue.
So I think that is a big factor.
So you need to wait for the call. Is that what you're saying?
So I'm saying that you might see a big drop in either direction right when earnings hit at 4:20 Eastern, because there's going to be a lack of details, and that's where Jensen Huang would come in and sway people on the call.
So be careful. Careful
initial reaction.
In those initial reactions. Steve Weiss, you own the stock too. I told you what the options market is betting on in either direction, but Christina raises a great point. Knee jerk on what happens could be an entirely different story depending on what Jensen Huang has to say on the call. And by the way, he's had a knack of, if not saving the day, so to speak, certainly guiding investor expectations to be more positive. I mean, I think the words he used at one point, like no end in sight, to the kind of CapEx spend that he had seen, the demand that NVIDIA was facing. What's on your mind today?
Yeah, no, Christina's way of playing it is absolutely appropriate, and that's true of every tech company. It's always on the call where you get the clear direction. Look, if you go back and you look the last 2 or 4 quarters with NVIDIA when they reported, they've made all their guides, but where they've missed on a couple of those, 2 of those 4, is on the whispered number, and the stock has taken a major hit at that point. It's 1-to-1 correlated with the overall market, so it trades more in the market than just its 8% or 6% weighting. So that's critical, but it's also bounced back very quickly. So what I'd say is that just stay where you are. What I focus on is that China, while it's extremely important, demand still continues to outstrip supply. So they can make up for that demand elsewhere, and that's eventually what they're going to do.
So if we take a look at this chart, right, this isn't a chart that basically is giving you a screenshot of yesterday afternoon. If you look at the dip that happened in April, in between the 2 M's, and then the run from the end of April all the way up through now, the stock has tremendously outperformed, right? So how should we invest in NVIDIA? What the gentleman is basically stating is, do not overreact to the report and the earnings report specifically. But the most important thing is to listen to the CEO, which is Jensen Huang, and what he says on the earnings call. Because there's one thing when you put out numbers of what the revenue is, what the profit margin is, and things like that. But the the earnings call will give you the context for, what's really happening within the company. All right. So we're going to transition to the actual earnings in which they're going to give out the numbers. Right. And, the numbers basically tell you a lot about where the company is and ultimately where the company is going. However, China revenue will not be in this report. Right. And we'll get into more of the details of the reason why in a second.
Somebody that follows NVIDIA for a living. That is Chris Rollins, Senior Analyst at Susquehanna Financial Group. Chris, we appreciate you joining us. You've been listening to what we've had to say. You've had some time to kind of chew on the numbers. What's your take on the quarter and whatever else you've read or heard?
And before we get into this report, if you pay attention, right, someone that for someone that does not pay attention to earnings reports, right, you see this NVIDIA Q2 data center revenue miss. What does that mean? It means that the number to the right, the 41.34 billion, was the estimated revenue number for data center revenue within the company of NVIDIA. So when they say they missed, it's based on the fact that they are reporting 41.10 billion in revenue versus the estimate, which was 41.34 billion. So when you start to see companies miss or beat, it basically is the difference between the estimated revenue or profit margin or whatever the street is estimating, Wall Street is estimating, versus what the report is from the company.
Yeah, I think there's probably a knee-jerk overreaction. These numbers were just fine. The quarter was perhaps a little light, but the guide was absolutely fine. Also, Colette, the CFO, has already been speaking to the China opportunity. They now, once they do get official requirements around China and what they can ship, they expect to do another 2 to 5 billion in H20 revenue to China. So put that on top of the Q3 revenue guide, which was just fine.
Let's break down what he said, right? So first thing, there's a difference between the report and the guide, right? We got to understand details. Details matter. The report is what they reported for what the earnings was for the quarter. So Q2 earnings was X. The guide is moving forward, which is the most important thing. We are guiding that the next quarter or the next year, we're going to do this. And what you want to see within a company when you're investing in them is growth. You want to see more revenue. You want to see a higher profit margin. You want to see more business in the future. It's cool what you did in the past or what you've done currently in the present, but what are you going to do in the future? Then prices stocks to go up, right? So if you see a company that's losing revenue, that is losing profit margin, that are guiding negatively in their future, that's not a company that you want to ultimately invest in, right? But if you see continued growth, if you see progression when it comes to, let's say, for example, Amazon has a low profit margin, you want to see Amazon's profit margin continue to go up, right? Nvidia doesn't have that problem, right? So, but you want to pay attention to these details, right? So what he is saying that Nvidia did not put in their China revenue for their chip due to the Donald Trump's presidency and some of the government restrictions, right? They can't forecast what their projections is when it comes to China sales because they don't know what the current restrictions are going to be in the next 3 to 6 months, right? But they can guarantee that once those restrictions are figured out and put plainly, they're going to be adding an additional $2 to $5 billion of revenue just in the China H20 chip sales. So if you take a look at these numbers, right? The 46.74 billion versus the 46.06 billion. Nvidia is reporting that they already beat in revenue. But if you add the China revenue, they're going to be really much higher. They're going to be much higher. We're going to add, let's say on average, we add 3 billion, 2 to 5 billion. We're going to add 3 billion. They would be at around the 49, almost $50 billion in a quarter. That's insane, right? So when we talking about the forecast in the future and that guide, NVIDIA's guide is going to be really good, right? And if you pay attention to the stock right now, and this was yesterday, right after the earnings report, the stock dropped a little bit. I think it got down to about 75. I'm sorry, 175 after the market closed, and it's rebounded currently right now. But the initial reaction was negative based on a data center miss and the uncertainty when it comes to the China sales for their H20 chips.
These revenue numbers, and I want to really highlight this for the audience, so everybody around the table knows this. Annual revenue for NVIDIA was about $17 billion 4 years ago. About 4 years ago, I'm looking at Capital IQ, about $17 billion. It's now estimated to be what, $150 billion, Chris?
Yeah, going higher to 200 billion total.
So
yeah.
17 billion to 200 billion in 4 or 5 years. I don't know if we've ever seen that. NVIDIA's added $1 trillion, $1 trillion with a T in market cap this year. That's 10 Starbucks or 5 Qualcomms worth of value for one company in 8 months. How long can that trend, that growth rate, continue?
It will slow, but the ChatGPT moment in 2022 changed everything. And the value has accrued to NVIDIA, who is powering everything, at least 80% of everything AI right now. And so that will slow, but 250 billion is a reasonable expectation for next year. And we'll be working on 300 billion, we think, in the years after.
So what they're talking about is growth. And as I stated, just a minute ago, you want to see a company continue to grow over a long period of time. And future growth can almost guarantee, consistent, sustained success. And when it comes to investing in a stock, that's what you want. Right. So as I said, before we started, that NVIDIA is the most important company in the world. And it's definitely the most important company as an American company and as American technological dominance. And I probably said that word wrong, but it is what it is. For American technology moving forward, NVIDIA is by far the most important company in the world. And we're going to talk about Dan Ives, and he's going to give his last opinion on the earnings report that happened yesterday for NVIDIA. But I want to put this a little nugget out there real quick, that it's very important that you as an investor invest in the things that are going to ultimately help your portfolio, that's going to grow, that's going to help you make more money. Right. So when we start having conversations about, hey, Antoine, what stock should I invest in? Hey, it's real easy. What companies, as my guy Ian Dunlap will say, what companies basically provide the growth for the United States? Ask yourself that question. What companies provide you with, or provide the country with, the GDP growth, overall growth within the United States? What companies provide that? If you can think of the top 3 to 5 companies that are single-handedly responsible for the growth of the United States and the continued success over the next 10 to 20 years, that should answer your question. And we start thinking about technology companies like Microsoft and, Apple at a lesser standpoint at this point. And we start having conversations about, obviously, NVIDIA, right? And then, hey, is Amazon on that list? Right? Everything getting packaged, delivered to you to your to your door. They got new distribute the do new facilities popping up every year. It seemed like at this point, what companies drive the revenue and the growth of the United States of America? That's the companies you should be invested in. It's not as difficult as you think, right? So we're going to get back into the Nvidia earnings, and we're going to tap into that. But I wanted to put this out here because I get this question all the time. I don't know what to invest in. It's not as difficult as you think, right? The most important companies in the world. They continue to grow every year. They continue to provide growth, guidance, revenue. You spend money on them every day. You use them every day. Those are the companies that you should be invested in. So let's take a look at the after earnings and the opinions of a gentleman that works on Wall Street and does this thing when it comes to his company, which is Dan Ives. Let's take a look at his opinion of Nvidia's earnings.
I want to start with the same question I asked our 𝐥𝐢𝐤𝐞 earlier. We have a lot of notable voices out here that believe that this is an overreaction to the stock, and the stock actually has the potential to go positive throughout the trading day. What was your take on the quarter, and do you think the downside move was an overreaction?
Yeah, Frank, I think the stock's up today. And to my point, I think it's really when you look at the guidance, and that's not even factoring in China. I mean, China could be an incremental $2-5 billion. And they did for the first time. Jensen talked about maybe giving a little sneak peek. China revenue could be 50% growth. I mean, that was just eye-popping. And I think as investors digest this is a stock that's up, and I think a further validation for the AI revolution as well as Nvidia.
All right. The miss was on data center revenue. It was a very slight miss in all fairness, but it was a miss. How should we read that? I know it doesn't include any China guidance, but the fact that it wasn't a blowout quarter for data center when we continue to see these CapEx investments by the hyperscalers and other companies.
Look, Frank, I view it as noise because in my view, you got to look at the story with China. You can't look at it excluding China. And I think when you look at this quarter, you look at next quarter, and what I think the most important thing Jensen talked about is the 50 billion, the 50% growth, when you're thinking about what China could be. I mean, you put it all together, this is a story that is actually just going into acceleration mode. So there's nothing here that makes me less bullish. I mean, I actually think you're more bullish as a validation point in terms of what you're seeing without China.
All right, Dan, we know you're one of the biggest bulls when it comes to tech on the street, but there are some other factors here. First, we had a report yesterday that China's trying to triple its chip output. Our 𝐥𝐤𝐞 mentioned there was a Chinese chip company that saw its profits increase by 4,000%. So there seems to be some rising domestic competition, and the Chinese have also voiced some concerns about security issues with these H20 chips, and also just, I guess, some hurt feelings about some things that the Commerce Secretary had. I mean, aren't these some real issues for this company's ability revenues that they've forecasted, but aren't there some real headwinds along the way?
Yeah, look, no doubt. I mean, Jensen's going to have to play that 10% politician, 90% CEO, the back and forth between DC and Beijing. Look, the biggest chip on this poker table is Nvidia, but it comes down to in China, they want Nvidia chips. It's the only, to me, not just game in town, it is the chip fueling the AI revolution. And I think as you start to see this play out, you're going to see that China market continue to expand massively because they're years ahead relative to any other competitor, including Huawei. And I think that is just the reality as this all plays out. There's going to be a lot of noise, but at the end of the day, the top of that mountain is the godfather of AI, Jensen Nvidia.
So that's Dan Ives basically giving his opinion on the reported miss when it came to Nvidia's earnings, specifically towards data center revenue, right? And a lot of people reacted negatively to the stock for that reason. That's why the stock initially dipped I think it got to about 3% after hours, and it did recover, right? I'm looking at it right now. It is sitting at $181.20. $181.20 currently. I think it got down to 176.41 today. I am invested in Nvidia. I am definitely a supporter of what I would call the most important company in the world. It is my largest holding currently right now when it comes to the stock market portfolio. And I am looking to add more shares within a dip or within a a slight downturn within the stock. And we may see that in September. If you invest, if you're new to investing, just know that September is one of the worst months of the year to invest in the stock market, meaning the stock market does drop on average about 2%. In the month of September. So there could be a little bit of red that we could see over the next couple weeks as the market, transitions into the fall and the money slows down a little bit, right? So just take those things in consideration. If you are interested in jumping into the stock of Nvidia, I'll say, try to get it around that 170 mark. 175 is probably a good entry point. If it goes any lower than 160, I would buy a ton of shares if you could. Currently, again, it's sitting at 181 as of right now.